Welcome, everyone. It's Angelo Robles, and welcome to At Family Office. Well, as promised, for those of you that heard my lives, which you all should be doing, earlier in the week, we had the return of the Dr. Craig Kaplan, who really is one of our go-tos about something, it may be kind of important from investing in much other, called AI. And Craig, I just can't resist. I'm going to do your open in a second, but you were kind of about 35 to 40 years too late, because I'm imagining that Zuck is throwing around these massive bonus packages, which we're going to get into in about 5 or 10 minutes. And you must be saying, like athletes did 40, 50 years ago, like, darn, now it becomes the coolest thing where they want to pay, 9-figure packages for.
I think it's fine. It's, he's doing what he needs to do, and Meta's one of my favorite companies, so I'm happy to make money alongside him.
Well, let's go. We're definitely going to talk a lot about that. Audience, pardon me, I don't know how, in the summer with 90-degree humid weather, I caught a terrible cold. So this will not be my best voice. I may cough, but let's get to it. So what happens when you have someone with a hedge fund manager background, also in AI and computer sciences, really since the 1980s joined me? Well, you live to decode effectively where power, capital, and cognition are heading in today's world. And henceforth, we're very fortunate to have back, it's been a while, Dr. Craig Kaplan of superintelligence.com, the CEO of IQ Companies. And we're going to cover so much, everything, mainly investing centric, but we'll go a little off that into some more societal safety and other issues relative to AI. We're going to cover Meta's AI scramble that I hinted at, Jensen and Nvidia, why they still may have a massive advantage really for years to come, the AI talent wars, as I call them. We'll talk about the QQQ versus the SPY, the Max 7 versus the other 493, if you want to call it that. We just have so much we're going to go over every one of the Mag 7, and then we're going to cover some companies that are probably not spoken about as much. Both Craig and I are active allocators. I'm a little more so in some of the private markets in AI, but I've been looking to do this for a couple of months. There's so much going on, and it's great to have you here again, Craig. So
great to be with you again.
Why don't I start? I think we're both on the same page with this, but given your prior hedge fund days and hedging risk and a little bit more thoughtful responses in ways than my all-in jump off the cliff and build a parachute on the way down, I just don't see any stopping this train. The cat is out of the bag. Look at the companies that make up the top 5 companies on earth, really the Mag 7. Look at their growth over the last couple of years. Understand the facts of, will this be as impactful as fire and electricity, that it will never be weaker than it is today. And though some people say Jensen has said different things, if he says it doubles every 6 months, well, do the math on that. That's 64x at the end of 3 years. Do we have the energy to keep up with that? Well, that is very, very debatable. But again, it will never be weaker than it is today. Monopolies or moats, however you defined it, may come crumbling down to some of the more traditional industries. Therefore, how could an investor kind of not be all in on AI? Now, I don't necessarily mean 100%, but a majority. For me, I may dabble in some real estate, some Bitcoin, treasuries, and gold. I may look at other companies that are interesting dividend-paying companies, but I just don't get why not 60 to 70% of a portfolio? How could it not be in AI? We could argue a little bit of diversity between public and private. I get it. Is it going to be more volatile? Yes. But you look at all the various areas where AI breaks down, from application layer, infrastructure, energy, etc. There's just so much opportunity, although we could argue a lot of noise. How do you see it when I tell families, and they look at me the way they looked at me when I spoke about Bitcoin 7, 8, 10 years ago? Like, what do you mean, Angelo? Isn't 3 to 5% enough? What do you tell them? What are you doing? And maybe what's a more sensible approach from your perspective?
Sure. And, just a disclaimer that we've always had in these conversations, this is not investment advice, but I will speak to what I've been doing with my own personal portfolio and also how I see things. Because these are two of my favorite topics that come together, which is why I love doing these podcasts and interviews with you, Angelo. I've spent 20 plus years in the investment world and, 35 plus years in the AI world. And so it's my two favorite things coming together. I think from an equity perspective, to the degree that you're going to be invested in equities, AI is the hottest thing, the hottest part of the equity market right now. In terms of, do you have 70% of your portfolio in AI companies? To me, I have to go back to my hedge fund days and risk management, portfolio allocation, portfolio construction, and so much depends really on the goal. So for family offices, obviously, growth is a goal. I think AI is probably the best way, or certainly the best way that I know to sort of accelerate growth of a portfolio. But you also have to worry about risk management and sort of what the goals are. So that would be my only caution is some family offices may be a little more concerned with capital preservation, and that's legitimate. And so you're going to want to adjust based on your goals. But if you're asking me what's the best part of the equity market, I'm with you. AI is it. And we're just beginning. We're just at the beginning of this.
And relatively, Craig, we're in the same age bracket. We grew up during the 80s and 90s and were fascinated by investments. And we learned about value stock. We learned about growth stock. We learned about the great work of Benjamin Graham. We learned about looking at fundamentals. We learned about price to earnings ratio. In time, as we get better, we learn about, is there owner equity? How sticky is the board? The quality of management, capital allocation, which is huge. Yet somehow, at least the earlier part of what I said goes a little bit out the window in the uniqueness of technology, of AI. I'm not quite going to say, how do we unlearn what we learned, but why do some people have a hard time with this? And again, they're missing on some massive opportunities. They think they're hedging, that they're muting risk. In reality, they're really not. But why don't I hear your perspective?
Well, so I have a slightly different take on it. I think all those things that you mentioned, looking for good value in your investments and paying attention to all the tenets of good investment, I don't think we need to throw those out the window. I think instead what we need to do is apply them to the world of AI stocks. So even though, as a general theme, artificial intelligence is probably the hottest area of the equity market, there's still plenty of room to be more intelligent in how you play in that space. And I think things like valuation, for example, are very important. And we may talk about this more as we go on, but when I look at the different AI companies, one of the things I'm looking at is, how good is this company compared to how is the market valuing them? And there are some companies that are undervalued relative, in my view, to the talent and the research that they have. And there's other companies that, yes, it's a good company, but I'm sorry, I'm not going to pay 188 times earnings for this, because there's another company that I could pay a fifth that I think is as good or better. And so I think those principles and those disciplines that investors have learned can be used. But I think the way I like to use them is within the space of AI companies, so that we can kind of pick the better ones from the not quite as good ones. And unfortunately, what often happens when there's an exciting new development like artificial intelligence is everyone just sort of jumps on the bandwagon indiscriminately. And there really is a difference in the different companies. And I think you need to retain some discipline in how you evaluate those.
Of course. And I think the first time I had you on was about 2.25 years ago. You were just incredibly excited about Nvidia. You end up getting a grand slam multiplied by 10x on that one. So hopefully I had people ignore the bad stuff, but listen to the stuff that worked out. Of course, in hindsight, everything is 2020. But you said back then, and I'm getting a feeling it may have gotten a little narrower, the gap, but it still is there, that traditional Wall Street, especially if they're a little older, a little bit more classically trained from economics, maybe more in our era, they had a hard time wrapping their arms around broadly AI and Nvidia. And the metrics that they used, although we do find, especially more maybe you than me, some value in it, they were wrong about Nvidia. Now that we're 2+ years later, are they still wrong?
So I think my thesis, dating all the way back to our first interview together, as you say, over 2 years ago, has been and remains that even with the excitement and the enthusiasm for AI and the performance of the Magnificent Seven, even with all those factors, I believe that the street is still underpricing the speed at which AI is going to transform things. And so to me, that's been my main thesis and sort of the source of the biggest advantage that I think a family office or an individual investor can have over many of the larger asset managers. So if you believe that things are going to accelerate and that it's an exponential acceleration, at least we're on the exponential part of the curve. Even some people believe it will be an S curve eventually and it will asymptote out. I am not sure about that, but I can tell you for sure we are on this very steep acceleration. Most hedge funds, most large asset management firms, most investors generally sort of look at the past as an indicator for what's going to happen in the future, and they sort of project out, they extrapolate. But the most common way that people extrapolate is sort of straight line extrapolation, which doesn't work if you're on an exponential. And so if the street is extrapolating with a straight line and what's really going on is an exponential improvement, then they're going to be mispricing how quickly things are going to happen. And that's a tremendous opportunity to sort of get ahead of it. So I'm still on with that thesis, even though lots of people have caught up. Nobody was talking about Nvidia. I think in our first interview, I remember, you were saying, well, what about Microsoft? And I said, yeah, Microsoft's good, but Nvidia and Meta, those were the two that I liked. And those actually, I think, have been the best performers since then. And the reason, though, it's not that I have a crystal ball, it's just understanding the field. And I think this might be worth repeating for the investing audience. There's three main things to understand in AI. It's data. You got to have data to train these things. It's the chips, the GPUs, and the processing power. And it's the algorithms or the talent. Those things are linked. So if you have a good leader, you'll recruit good talent, and good talent will create good algorithms, which is software. So it's the chips, it's the software, and it's the data. Those three things. With just understanding that those are the three main drivers, you could see from first principles that certain companies have a big advantage. Nvidia was far ahead in the chips. It also had a very good software architecture. CUDA, it was ahead on the software.
We're going to get to that, yes.
Yeah, and so we can go through these companies, but it'll come back when we look at it. You'll be able to see those three things are present in every case where the company has done well.
And Craig, you mentioned like Nvidia and Meta that you thought was going to outperform even, say, a given index. So I think for any investor, that's what we have to look at. The reality is, like I said, sometimes debating what you used to be a GP and GPLP structures, just look at the real math, net of fees and taxes. So it brings up the bigger picture. Do I invest in the SPY? Sometimes. Do I invest in the QQQ? That likely has been a very good move for a long, long time over time, but can be volatile. Why would I choose an individual stock over a more broad index? It would only be because my thesis is it's going to outperform the index. You ended up being correct about Nvidia and Meta. You would probably agree that even for most sophisticated investors, stop trying to be Q. The QQQ is going to be heavily tech savvy and built up, especially in the Mag 7. And you're probably over time, you may need to look at your thesis here and there, but you're likely going to outperform most active management. So an example I gave, and probably among the most popular solos that I did in a long time, Craig, was the Bus family selling the Lakers. They purchased it in 79 for 67 million. They sold it recently for 10 billion. And if you put that same amount of money in the S&P, which doesn't have the one company NBA entertainment risk, coupled with the lack of liquidity, you would have broke about even. But if there was the NASDAQ 100 in the QQQ format, you would have 3x'd that amount of money, close to it. So close to 30 billion. Now, are there some tax advantages to the uniqueness of owning the Lakers and net operating losses? Yes. Is there prestige? Of course. Is there the owner's box? I get it. But the lowly NASDAQ and Triple Q just being patient would have whipped butt. And yet somehow we only hear about the sexiest of investments. Well, over time, you'll be surprised what a lot of the right public companies that a lot of smart investors, of course, would do. So you opened up the door, Craig, there when you said talent. And I'm going to go back to how we started with effectively a little bit of Meta and OpenAI. So we have to face reality. We're both fans of Meta. We like the fact that Zuck is, well, rather incredible. Like him personally or not is not the issue. I think he's an incredible capital allocator and has made some wonderful decisions broadly at Meta. But you also have to face reality. We're both active utilizing LLMs and AI, and Llama as a unique open source model is just not as good as some of the others. So people like Jan LeCun are wonderful intellects. I actually met him before and briefly when I knew nothing in 2017, went to New York at their headquarters and interviewed him, and he was a cordial gentleman, but he's a little bit old school. So they have made some changes. As I hinted, like a sports superstar, they poached OpenAI talent at incredible bonus packages and compensation packages that over the course of 3 to 5 years may literally for each one be worth hundreds of millions. On the surface, you're like, oh my God, how could this make sense? Then you dig through it deeper, and whoever is going to be the winner or among the top 2 or 3 winners is going to have a massive advantage that will be worth well over that. Do you think it was a good decision for him to do that, coupled with the other decisions that they have made recently?
Well, I agree with you that I think, their large language model, the Llama family of open source models, was beginning to sort of lag behind some of the others. And so I think there was a sense that they needed to do something. Mark Zuckerberg is known for taking big bets. And I think that's one of the reasons why he's been as successful as he is. But he also seems to have a capability where sometimes he's too early. I actually believe many of his bets, like Reality Labs, which Wall Street didn't appreciate too much generally, felt like it was bleeding cash, that he's correct about that. But he's probably, he mistimed it. He thought it would happen faster than it would. And it's very difficult to get the timing of these things correct. To his credit, he's also willing to turn on a dime. And if it looks like the bet was wrong, he'll find a way to kind of back out of that and then get back on track. So I have great confidence in his leadership skills. I think I have a strong bias towards founder-led companies that
I agree.
Where the founder has demonstrated success. And you have that with Nvidia, with Jensen, you have that with Meta and Mark Zuckerberg. You don't have it as much now with Alphabet or Google, right? Because the founders have stepped back. Now,
well, I mean, Sergey has jumped in a bit now.
Jumped in out of, I don't know where he was, but he's back there. But still, he's not the CEO. He's sort of helping where he can. And the same with Microsoft, although, I think you have very talented leaders at both of those companies as well. There's still something magical almost about the founder-led company when you have the quality that you have with a Jensen or a Zuckerberg. So is he making the right decision? I don't know. We'll have to see. But I'm pretty confident that if he gets it wrong by a little or by a lot, he'll find a way to adapt, because that's what he's proven he's able to do. So that's what gives me confidence about it, more so than the particular exact people that he poached, or with Scale AI. That was a huge investment in bringing Alexander Wang on board, who's also very talented, very young, talented guy. It's hard to gauge, did he overpay or underpay, but I think he'll work it out. He certainly
I was going to bring that up as well. That wasn't the only move that he made. Like you mentioned, Alexander Wang is incredibly well regarded. Scale AI is a very intriguing company. They did the 49%, so it sped things up and avoided some of the challenges of a controlling interest. And not only that, although this one didn't work out, he made, I'm assuming, a pretty incredible offer for who might be the smartest person in AI, Ilya Sutskever. So now Ilya is doing his own thing that we'll talk about in a second. but he made, I'm sure, a very, very, very attractive offer for Ilya, probably even billionaire level over the course of years. But nonetheless, Ilya passed. But the fact that he took those three actions and two of them worked out to his satisfaction, whether they'll work out long term for the stock, I think so. I think they were incredible moves. But in reality, of course, time will tell. I mentioned the before mentioned Ilya. So how would you read this? He raised what, $6 billion at a $32 billion valuation for effectively a startup. They really haven't done anything yet. But besides his incredible brand and respect he has in the industry, does it also show you that this game is just not over? As big as Google is, as Meta, as the big players, Microsoft, that there's still maybe someone like Ilya and his company or others that could rise that, who knows, in 3 years, 5 years, 7 years, maybe right there. It's an incredible time.
Yes, I think so. If we go back, I'll keep bringing everyone back to those three pillars, sort of the data, the chips, and the algorithms or talent. So the data, you can kind of see, you need to be a large company or have the ability to acquire lots of data. So Google, Meta, they're great. Chips, companies like Nvidia, or even if you're Google, you're making your own chips as well. But the one where you can disrupt the easiest is really that algorithm or talent. So that's where in Ilya Sutskever, he was one of the researchers at Google who came up with the original transformer algorithms and the precursors to what really set off the ChatGPT revolution. OpenAI sort of lured him from Google. He came to OpenAI. Then he wasn't, I think, probably happy with sort of the safety approach at OpenAI, and he went to found his own company called Safe Superintelligence Inc., SSI.com, very similar to the name that we have. So in terms of goals, I feel like Ilya and I have very similar goals, which is, yes, we'd like to have a commercial success, and I think he's well on his way towards that. But more importantly is that the next versions of advanced AI, which are artificial general intelligence and super intelligence, which is what he's almost exclusively focused on, these are not only tremendously potentially positive forces, but also pose great danger. And so it's very important to develop them in a safe way. And I think there's plenty of room for innovation there, because that has to do with the algorithms and the way that you use the data and use the chips, right? And so that's where we can still see some disruption and some upsets. We already saw it in China with DeepSeek. That wasn't a large company, compared to Google or Nvidia or whatever. They were tiny, and yet they were able to do clever things with their algorithms and their software in order to leapfrog and jump right up to that level of these companies that had spent many billions more than they did. So that kind of shows you that we're still in this space where there's lots of innovation that's possible, a lot of unknowns, a lot of things still to be discovered on the research side.
Now, I used to do this back in the day a couple of years ago when the FANG was it, and I would have a guest on and we would go around the FANG. So we're going to do the same thing with the Mag 7. We basically, I think, already covered Meta. Overall, broadly advocates and fans. Zuckerberg is, broadly speaking, incredible. I think we both feel they made excellent decisions, although certainly at a big cost. They do understand that they're behind, and I wouldn't bet against Mark. So I agree that, is that going to beat the triple Q? Of course, we don't really know, which is why most people, even multi-billionaires, are probably better off for a good part of their portfolio being a little bit generic and indexed like that. But personally, I think I do and you do think that it will outperform that. Let's go to Nvidia, your original darling, the one that you knocked it out of the park a couple of years ago. There are some people that are going to state, now hold on, the hyperscalers, Google and Amazon, they're starting to design their own chips. That's going to eat away at Nvidia. There may be truth to that in time, but there's a reason why in the short midterm, not, and you hinted at it earlier, effectively CUDA. If you don't mind telling the audience why that matters and why, at least for a couple of more years, Nvidia has a massive stranglehold.
Yes. So Nvidia is still my number one pick. If I was only allowed one stock in the entire universe to own, that would be the one that I would own right now. And it is my largest position personally. And there's multiple reasons for that. In terms of, so first, I think we just have to acknowledge that the leadership is fantastic, right? You've got Jensen Huang, visionary, ahead of this curve by 10 years, pretty much. You can go back and read those old annual reports, 2004. I think you go back to 2004, and he starts hinting about AI and this is coming and people are going to get it. So he was way ahead. Everybody else has been jumping on, but he's been seeing this coming for a while. And he also is a fantastic leader, very lean organization. There's not a lot of middle management. He has some amazing number of reports that sort of blows out all the management theory that says you shouldn't have span of control more than 10. He's got 50 or something. So he's innovative. He's hardworking. He has good ethics. He's visionary. What I don't understand, when you and I both have had some experience with private equity and venture capital based companies, I mean, the first thing you look at is the team, right? I mean, it's not just the product and everything. You're looking at the team and who it is. And I think we need to do more of that sometimes with public companies. It's not all about PE ratio and the specific products. Okay, so that's the first thing to say about NVIDIA. The second thing, to your point, their moat and their competitive advantage. So I think they still have at least 12, 18 months at the minimum lead above their closest competitor. And part of what gives them a little bit of a moat is CUDA, which is an architecture. So you have chips, GPUs, but you also have to be able to program those chips to do what you want to do with AI. And currently what happens is there's lots of specific applications. There's AI used in healthcare. There's AI used in weather prediction. There's AI used in large language models. There's AI used in robotics. So each of these different applications, you need different software to program those chips. What NVIDIA has done, which is pure genius, because it's not something that they just did. They've been doing this for like over a decade. They've systematically and continually built out libraries, software libraries for each of these domains. They have their robotics library. They have their weather prediction library. They have their physics library. They have their machine learning library. So they have all these libraries, and together they form sort of a competitive advantage. Almost all of the machine learning researchers sort of are brought up using NVIDIA, understanding NVIDIA, using their libraries. They've made everything backwards compatible, so you can run the same library in their most advanced chip, and it will still work all the way back with a much more primitive chip that is kind of out of date. But that's okay. You don't have to rewrite things. So they've just made it very easy for people to use NVIDIA, and it's the best chip. So it's the easiest to use with all these libraries, and everybody else uses it. So that makes it easier for you to use it if you want to partner with other people. And at the same time, it's the best chip and the best, price performance. So that's amazing, right? To have built that. And it wasn't something that happened overnight, but it all came from started with the visionary leader and, somebody who really cares about what they're doing, is an engineer at heart and just loves it and keeps focused on it and doesn't get caught up in the hype up and down of what the latest talking head on CNBC is saying about, is the AI revolution over or is it just begin? No, he just keeps going forward. It's amazing. It's beautiful to watch, really.
Of course. And I mentioned the hyperscalers as some degree of competition, but there also is, from Samsung on chips to obviously AMD to even good old-fashioned Intel, who actually stock-wise, I haven't checked in a couple of weeks, has actually done very well. Anything, and I know we're getting a pinch off the Mag 7, but because it relates to NVIDIA, any inroads you feel that they're making relative to NVIDIA, or any specific opinion about them as an investment?
So the field of AI is huge and it's growing very rapidly. There's more demand than NVIDIA can satisfy, quite frankly. And so people who have to fill data centers with chips are going to be using their own chips if they make them. If you're Google or Amazon and you're making your own chips, you're going to be using those. You're going to be using as many NVIDIA chips as you can. You're going to be using the latest from AMD. If Intel has some offerings that you can use, you're going to be using those. So the pie is growing for everybody. When I say Nvidia is my favorite, it's if I had to pick one. I think they're the best one. But certainly these other chip companies are also going to benefit, and you can see it in their stock prices. They have been going up. When it comes to sort of as a family office or an investor might look at it, and you say, well, I got X amount of capital, where would I allocate? One of the things that I look at is, that's where those tried and true principles of valuation and things like that come into place. So even though I think AMD has a wonderful CEO, and I think they've made tremendous progress and sort of on their own, they're doing fantastically. As an investor, personally, when I look at it, I kind of look at AMD, and I don't know what their PE is. I think it's over 100 here. I could probably bring it up. But, it's trading much more expensively than Nvidia. And yet in my mind, it's not as good a company as Nvidia. So why would I allocate money to AMD rather than Nvidia, other than I want to have diversity, which is a valid reason. You want to have some diversification, and you don't want to have, single point of failure if something happened to Nvidia.
Exactly.
So those are valid reasons, but in terms of like pouring equal amounts of capital, no. In my investment world, I would not put equal amounts of capital, because one is cheaper and better, and the other one is very good but expensive.
And in terms of staying on the Max 7, and other one, an iconic brand and name, is going to be effectively Google, which has multiple brands, from what they're doing in Waymo to obviously YouTube. Now, there may be some antitrust issues. Maybe that's built in. We'll see how that plays out. But, and again, probably going back 7 or 8 years ago, they were probably the first of those companies to be more active in AI. And then I think I could state they dropped the ball just a bit, but no question, in the last year, they played catch up. If I personally had to rank the current LLMs, and we'll get to LLMs later, I'm not so sure that Google's 2.5 Pro at what they're doing in deep reasoning is not at the moment the best. So they're darn good. But again, it's a very competitive industry. What's your thesis there?
So, and I'm looking forward to talking about LLMs. We recently did a little comparison paper on LLMs and investing, which we can talk about. We'll share the results first with your group. We haven't even published it. It's coming out next week.
Well, thank you.
But in terms of Google, the way I look at that is they're very, very good in AI, and they're underpriced for how good they are. That's my thesis on Google. I mean, I cannot believe, I think you can buy Google at a PE that's less than, the NASDAQ or the S&P even. It's right around 20. And, that's, to my mind, yes, I understand there's reasons for that. It's not like that's accidental. They have legal issues, and they have court battles going on, and people want to break them up. And, they've been a little bit slow out of the gate on some of these things. So I understand the concerns that people have. But when I look at it from an AI perspective, this company has been focused on AI for their entire existence. From the day they were founded, they were thinking about AI, and the idea of having Google be sort of the global brain and, the ultimate AI system. I mean, this is the dream of the original founders. It's they have some of the very best AI researchers. They invented the stuff that everyone else is using that was borrowed or stolen, however you want to say, by OpenAI. That was invented at Google. But execution, they seem to be a little bit cautious, which I actually think is good, because there's some dangers about AI. But in the competitive world, it makes them a little slower, a little more careful, a little more thoughtful, a little more bureaucratic. And those are the things that I think have slowed them down. They're not moving quite as quickly as they could. But when I look at what they're trading at compared to what they have, and on top of that, not only do they have the talent, the AI research talent, they have the data. Think of how much data that Google has. Oh my gosh. For an AI researcher or somebody who understands the value of that data, that's huge. They have all this data they can use to train their models. You mentioned that you thought Gemini 2.5 Pro is a little bit better. I agree. In our tests, we find that. And you know what it's really good at? It's really good at the research stuff, the stuff that requires the deeper thinking. And I have a sneaking suspicion it's because of all the data that they have that they're able to use to train. They're getting an edge out of that data already. And then they're building their own chips. I mean, and then they're applying it to some of the most exciting application areas of AI, which would be, medicine and biotech. They have active efforts there, and they have Demis Hassabis, who's just a genius, and brought him over. So there's so many good things I like about Google. I can't believe they're trading at what they do, and if they don't execute, okay, then that they deserve the multiple or lower. But if they're able to execute, then people are going to look back and say, "Wow, that was a buying opportunity."
The street still looks at it as a search engine and ad business, and that is being a little bit cannibalized. So there is some adaptations going on. And like you said, on these topics, Wall Street tends to be a little bit slow to adapt on. The other company, and always the most controversial because of its CEO, and Cathie Wood's favorite, of course, and that would be Tesla. So Tesla is a little bit like what I described with Google, is diverse. What they're doing in robo-taxis as that's being rolled out in Austin, I think literally as we speak. What they're doing in robotics with Optimus that Elon and definitely others believe in time, and not 20 years, maybe 10, maybe the biggest industry there is, period. So I've always learned to put emotions aside, although I admit it's hard to do. I have always thought from the perspective of I rather be rich than be right. That's just me. Maybe I'm wrong. Maybe I have no morals. I don't know. Although I personally think that Elon is arguably the greatest capital allocator alive at the moment. I think I'm more bullish on Tesla than you after we agreed on probably the first 3 or 4, but I'd like to hear your opinion.
I think you are too. Let's see. I can tell you that I am not shorting Tesla and that I actually have a very small position. It's probably my smallest position of any of my equities, simply to watch it. But I'm probably far less bullish than you are for a couple of reasons. First, let's both agree that Elon's a genius on the technical side and as an engineer. I mean, fantastic. I also think his vision of multiplanetary species and going to Mars and everything is fantastic and inspirational. I think the leadership in the electric cars, there's so many good things I can say about Elon on the sort of what he's done as an engineer and as a business person. We'll leave the politics aside. But again, as an allocator, I don't throw out everything I learned as a hedge fund manager about valuation and so forth. And I just look at Tesla and I look at the multiple that it's charging. And I ask myself, I got Google at 20 and I got Tesla at over 100. And is it 5 times better? And I can't say yes to that. I just don't think it is. And I think he has a lot of challenges. That said, a lot of people have lost a lot of money betting against Elon. So that's why I would not bet against him. But I think he has some work. Let me put it this way. He has some work to do. Waymo is pulling ahead now, the whole self-driving car thing. He made a big bet that you can have self-driving just with the same thing that people have, namely just vision. You don't need radar. You don't need these other things. But it turns out that radar and those other things, even though they're more expensive, they are safer. The Waymo has way better safety record and is already doing many more robotaxi, and he's behind. He was ahead, but now he's behind. And so it's possible that was the wrong bet, or it's possible he's right, but he's better figure out how to get the safety up. So there's a lot of challenges there. He's an engineer. He's brilliant. He has brilliant people working for him. He may very well solve those. It's amazing to watch what he does with data centers. I mean, it's truly amazing to watch someone like Elon come to a new field and start with a blank sheet of paper and say, everybody's been doing it this way, but what if we don't do that? What if we just say, how should it be done? And amazingly, he's able to redo things, not only electric vehicles, but also how data centers work together, how they consume electricity, how you get them to scale. I mean, he blew away some of the previous thinking. So that's impressive, and you don't want to discount that. But I think at the multiple it is, I can't be quite as enthusiastic as you are, probably.
And I believe, for now, the largest company on earth, and the one that has been, a Fortune 10 for I think touching 3 decades, is Microsoft. They do have good leadership. They have the alignment with OpenAI, although you could argue some cracks there. What's your perspective about Microsoft?
I own it. It's one of my top holdings. So in that sense, I believe in it. I think I am a little bit less enthusiastic now than I was probably last time we did an interview, maybe a year or so ago. Or certainly what's happened is at the time, Satya Nadella is a fantastic CEO. So I always look to the leadership first. I think they have really good leadership there. However, were a little dependent on OpenAI. And as you say, there's now some cracks. And it's not at all clear to me that OpenAI is not going to try every possible trick or approach that they have to sort of detach and pursue their own agenda, even though Microsoft has this large stake in them. So then the question, suppose that OpenAI did that, then the question I ask is, how good is their AI team on its own if you don't have OpenAI helping you get to the lead? And there I have to say, I don't think they're as good as Google. I don't think the talent is as good as Google and AI, and yet Google's much cheaper. Microsoft 35. Again, sorry, I keep coming back to valuation because to me, it's about the nuance. It's like, of course, they're all going to do well in this space, but which one's going to do better? And I have to choose this one versus that one. So I say Microsoft at 35, Google at 20. Who has the better talent? Microsoft a little bit better management, getting things done, but they're dependent on OpenAI. Google's got all these things going. If they can just get their act together, maybe I'd rather go for Google. That's kind of how my thought process goes. But like I said, I own it and it's one of my top 5. So I can't be that negative on it. I'm actually not negative on it at all. I just am less positive than I am on Nvidia, let's say.
And probably the Max 7 that's the least spoken about. Even I don't really have a particular thesis on it. I'm kind of neutral. And that would be Amazon. Your perspective there?
So again, starting with the leader, on the positive, you have Andrew Jassy there. And he's the guy who basically came up with AWS and made that thing reality, which is the vast majority of Amazon's profit and also their future, right? It's the cloud and it's growing and they're putting AI models on there. So he's probably the right person to lead Amazon at this point, and I think that's good. As an Amazon customer, I have Prime and all those things. I just feel like under Bezos, there was this attitude, the customers first, and it was almost a sacrosanct principle. And now with Jassy, I feel more like, we can raise the price a little more. We can squeeze the margins. We can do this. We can do that. And yeah, from a business perspective, I don't think people are going to leave because of that. But I don't like that thinking. I would prefer to have a more visionary, we're going to grow it and make it bigger for everybody, which Bezos was so good at. Whereas Jassy, I feel a little bit more operational. Okay, so that's on the leader. Overall, good leader, especially for a tech era and AI era. I like them, but they're probably, right at number 5. If I were to do my top 5, they'd be 5 or maybe 6. And I can't sort of say that I'm super confident of that ranking. They maybe are better than that. Certainly their cloud business is going to do fantastic, as is Azure at Microsoft and as is Google Cloud. And they do have sort of the lead there in a sense. But I don't get the sense that their core culture was really AI based. I don't think they have the deep AI talent. Now they're getting it as fast as they can. But if I compare them to, say, Google, who really is kind of the gold standard in AI talent, I think Google's better and it's a lot cheaper.
Of course. And the last, again, we already covered Meta earlier. The last of the Max 7 is the one that is generally deemed to be the laggard. Who would have said that 5 or 10 years ago? No one.
I would have.
Oh, okay. Then you were ahead of the curve.
Yeah, I did not buy. If you're going to talk about Apple, is that who we're talking about?
That would, of course, be Apple.
I'm sorry. I was out of it when Steve Jobs passed away. So I was probably too early to be out because it definitely
were too early because actually they did very well after
Tim
that.
Cook did fantastic. I underestimated Tim Cook, so I made a mistake there. But yes.
And anything, we all know that they came out with a white paper that basically put cold water on AI and some of the things that Jan LeCun would speak about as well. I'm not denying that there's not some truth to their creative writing and positioning to market their story, but it did seem very much like we know we're the laggard. We know that we're run by MBAs and business people, not really a pure tech and AI culture. Therefore, why not pour cold water on it to slow down momentum while maybe we play catch up? But the catch up relative in their leadership does not appear to be in their DNA. But am I putting Apple to bed too early? They're still a great brand with the iPhone.
I use an iPhone. My kids all have iPhones. They're wonderful on their, ecosystem. I think if it comes to pure AI, they clearly are behind almost everybody. If we're talking about that paper in particular, to paraphrase and sort of my understanding of the paper, they're basically saying, look, we have a lot of systems that look like they're doing reasoning, but what they're really doing is complicated pattern matching. So you can be trained on a whole bunch of stuff on the internet that has reasoning steps in it, and then you can kind of spit those back. But that doesn't mean that you really understand how to reason. It means you can just do stimulus response, pattern recognition, and put information out that makes it look like you're reasoning. That's
but theoretically, isn't that kind of what humans do?
Humans do some of that. Humans do a lot of pattern recognition, but they also do step-by-step logical reasoning because we've invented math and logic, and it depends on the human. Some people.
I was going to say, is that one thousandth of 1%? Craig, let's be honest.
So this was my area. Problem solving. My PhD was in this way back in the day. So the short answer on the Apple paper, I would say, is they make an interesting argument. It's somewhat true today. It will not be true, in my view, in 12 to 18 months. So even to the degree that there is doing this, it's not going to stay there. Everyone realizes there's a certain amount of that going on, but there's also more sophisticated kinds of reasoning where you actually logically set goals and sub goals and follow it. And that's coming. It's already happening in some places. And 12 to 18 months from now, I think you'll see a lot more of that. So I don't think that paper is a reason to say the other ones are wrong or it's snake oil. I don't know if they put it out in order to slow things down, but I definitely feel like they're behind the curve and they got to do something. And the latest, I think as of a day or two ago, they've announced they're going to try to, to their credit, they're trying to do something. They're going to do partnerships with other people like, Anthropic or other companies that can provide the technology that they haven't been able to develop. So that's probably better than just sitting and doing nothing. But will they become the great company that they were when Steve Jobs was there or when Tim Cook was in his heyday? That remains to be seen. And I don't own any Apple right now. So there's the Mag 7, but I never, ever had all 7, except back when Steve Jobs.
And you have the Mag 7, if you look at the SPY or the S&P 500, the Mag 7 and 493 others. Yeah. Now you have some AI-centric companies that are fast rising into the top 30, like Palantir. Maybe we'll get a little bit to them later. And you have dozens of other companies from IBM to Intel that obviously are touching technology and AI. So maybe it's even 50, 60, 70. Are the most of those 493, where's their moats? AI is going to, I feel like, eat them up relative to some of the larger companies we're noting, relative to new startups being created that are AI native. Therefore, I get the triple Q. I don't quite get as much the S&P 500 for the reasons that I noted. Could I be wrong? Of course, and it wouldn't be the first time. Am I overreacting too much, Craig?
Well, I think the other companies that, are not sort of AI developers, AI research companies releasing specific AI large language models, or that's their main thing. They have a couple of things that will not go away. One of them is, I think increasingly their competitive advantage will come down to how much unique data they have. So if I'm an insurance company and I don't know anything about AI, but I have a really good understanding of the insurance business. I have a huge database of claims and what was paid out and when and all that. All that data is very valuable. And when combined with AI, anybody's AI, any of the top AI guys combined with my data would then give me as an insurance company a lead in that field. And that same approach will play across medical and across all the different domain niches that these other companies are in, finance. So the quality of the data, and then I think probably the relationships are also going to be very important. So you don't need to have the best AI that you developed yourself if you have the best data in your industry. That will make you plus even a second, I wouldn't say second rate, but let's say you don't have the very best large language model or AI system, but you have the second best. If you have the best data, you'll still win. That's my sense of it.
Interesting. I'm going to switch over a little bit to effectively kind of energy and infrastructure. Going back to the one and only Jensen Huang, he states energy turns into intelligence. What is your take on that kind of legendary comment?
I mean, it's brilliant. It's simple. You can visualize it, and it's true. It's got an element of truth. This is what's happening, is you're taking electrons that are produced in a power plant, you're putting them through what he calls an AI factory, and what's coming out the other end is intelligence. And that's the deal of the century. My goodness, if you look at the price per watt of electricity that most people, you and I, might use to boil, a cup of tea or, cook something on the stove or do heating. If you look at the amount of intelligence you could create with that same watt, the intelligence is worth so much more than the hot cup of tea on a, watt for watt basis, that there's tremendous arbitrage. I mean, you can just take this relatively low priced electricity and turn it into really valuable intelligence. And that's 100 to 1 or 1,000 to 1, difference. And at the same time, it's also, so given that, what you would expect if there weren't a lot of bottlenecks, and there will be bottlenecks in everything, is that the demand for that very valuable intelligence is going to just create a huge, pull on the energy, and more energy is going to be sucked into AI, and that's already happening. And then you worry about what are the second order effects. The people trying to eat their house and cook their food are competing with somebody who's, paying so much more for the same electricity. So maybe you need regulation. So there's a lot of things that need to be worked out. But I think generally he's right. We're now at this amazing stage of human history where we can put in electrons and get intelligence out the other end. And the intelligence is very, very valuable. And there's going to be a shortage of electricity because of that demand.
Well, that obviously plays into the investment picture and some of the layers of AI. How do you look at things if you do, and I know it may not be your core focus, but natural gas and even nuclear energy?
So you're right. I'm not an expert in this. I am smart enough to realize that there's going to be this general trend, and that generally there will be a shortage of energy because the value that you can turn it into is so high. From reading, without being an expert, just sort of trying to do a little research on my own, the consensus seems to be that the easiest and fastest way to bring new energy online is to use things like natural gas, which is readily available. And then in a longer time frame, then you can have things like nuclear. And so you have companies like Constellation Energy. But it's harder to spin up a new nuclear plant than it is to get a new natural gas plant. And it's easier to just kind of get more gas and oil out of the ground than it is to sort of, do all the things to get alternative. So it's hard for me to know exactly the time frames and when is the right time to invest in what piece of the energy sort of supply chain. But I would say generally there's going to be increased demand for energy by a lot. And already people are looking at sort of, where do I locate my data center? And a big thing is, can I go find orphaned sources of power? Like there's some hydroelectric dam that doesn't have the transmission lines really built out, so they can generate lots of electricity, but they can't ship it to the customers. How about put a data center near there, right? To use it, that kind of thinking. And people are doing that, and there's a lot of opportunity. So for people who understand more about that space, I think a lot of money will be made.
Could energy bottlenecks, I guess it's obviously yes, but could energy bottlenecks delay or even collapse exponential AI growth curves? And my words, not yours. This is a Cold War between the US and China. We arguably have a little bit of an IP edge. We don't have an edge in manufacturing and energy production, nuclear plants, and that may mean we just don't win. But let's not count the USA out too early. But bottlenecks and things that delay or slow things down, sometimes for political reasons, I mean, I don't know if we're going to get too much into what happens if China wins and hits artificial superintelligence first. We may hint at it, but it's probably not too good.
Yes, there's a lot of geopolitical ramifications. I don't think I think these problems can all be solved. It's really a question of what's the time frame for solving them. And I think AI itself can help solve them. As the systems become, more and more powerful, more and more intelligent, you can actually task AI with solving problems like, hey, here's the resources I have. How do I power these data centers given these resources and these constraints? Come up with some creative ideas. You have already humans working on that, but as the systems become more advanced, I think you'll be able to get systems that are almost as good as the best humans, but think 24/7 about it. And the human has to have breakfast and go to sleep and everything else. Right?
Yeah, like I think what you're also saying very kindly, if we listen to Kurzweil, that perhaps in 4 years, comparative to Einstein's IQ, literally AI may be 1,000,000x that. Imagine what it's going to be able to do in fusion energy and a variety of different things, some of them very good for agriculture, for energy, and perhaps some of them for weaponry and bioweapons, not so good. But again, we can't cover everything, but I think it's worth of noting to the audience. My last energy question, and I know not your core focus, any particular perspective on CoreWeave?
Okay, so CoreWeave really, as I understand it, so I own a little bit of CoreWeave. I was very fortunate. So it went public, poor guys, at the absolute worst time, right around when the tariffs and everything was depressing the entire market. So they went public at $40. They crept up a little bit, and then they were trading below their IPO price. And I looked at that and I said, that's crazy. These guys are better than that. I would have bought it at 40. So I got some at relatively cheap price at 39 or something and held on to it. And then it just, the tariff concerns went away and people got more confident and all that. And, it's gone up 300% or some crazy amount since. So at 40, it was a buy, clearly. And, I still would buy more if it was at that, because their business basically is data centers, but specifically geared towards AI. So people say data centers, but that one word covers a lot of ground. There are data centers that are kind of old school, historic legacy data centers that are not really equipped to run modern AI chips very well because they're not liquid cooled. They don't have the right electrical powering. They were designed for a different era. And it's really expensive and everything to, refurb those. And so if people don't make that distinction, you can sometimes say, wow, I think I should buy this company because it's a data center company and data centers are getting bigger. But not all data centers are the same. CoreWeave is focusing on the ones that from the ground up are engineered for the most advanced AI chips. And then they have the business of leasing and, selling that computing time to people who want to use the AI chips. And there's essentially, as we said before, insatiable demand for that right now. So it's a great business. It's a young company and there's all kinds of questions about balance sheet and various things. So I wouldn't just buy it at any price, but I could tell you at 40, it was a good deal. And now I'm probably just holding on, even though it continues to go up. I just don't have enough information on it.
And a couple of other plays that relate to energy and AI that get a little deeper, and you may not have a thesis, and that's fine. I've spoken about it mainly to my members before, and that would be things like metals, critical metals. It's not that these are so rare. The US actually, and our allies, I think Canada's still an ally, it's debatable, but we have a lot of it. It's our processing and production, because it is messy and there's a skill level to it that we haven't adapted to yet. Are you doing any plays relative to copper, relative to silver, relative to effectively critical metals and its impact to the AI infrastructure?
So again, I'm not a domain expert in those materials or certain commodities. So whenever there's certain things I know really well, and I'm much more willing to go, heavily concentrated in that because I feel like I know what I'm doing. Here, I'm more of sort of bystander. I am watching copper. I'm watching silver. I think from first principles, it makes sense that there's going to be increasing demand for these. You also have other reasons for potentially diversifying just from portfolio construction, where there seems to be a general concern that, with federal debt going up and worries about printing more money, that hard assets would be a good sort of way to, hedge against that. So I think you got the hedge argument, which would apply to gold as well. And then you have the material argument, which is certain materials, in particular copper and silver, they're used in electronic components. They're going to be in more demand as all these things are built out. I think from first principles, that seems true. But if you ask me which exact copper company to buy or which silver company to buy or when to do it, I would not be able to give advice that I feel is well-grounded.
Of course.
Yeah.
And for my members, I go deeper into more esoteric companies in private and in public markets. I do think some of the electrical components and infrastructure that makes up the data centers, and some of them are public companies, are very intriguing plays. But again, my members do get certain advantages. There is another company I think I'd be remiss if I didn't bring up, and wow, did it pop into the top 30, and that would be Palantir. Any particular perspective there?
So I don't own it. And the reason I don't own it, the main reason actually, is because, the majority of their revenue comes from defense contracts. I'm already worried about AI safety. I don't feel like I want to sort of take my personal investment funds and fuel additional development of AI powered weapons. It just feels like, it's dangerous enough without that. They don't need my capital to fund that. That's the main reason. But even if I didn't have that reservation, the multiple is, nosebleed levels. It's really high. So it's very expensive. And I think there's other better plays to, that's one where I feel like if you had bad news or something happened, the multiple is so high that it could drop a lot. That doesn't mean it won't keep going up. It's been doing fantastic, and everybody who's been in it for the last year or two has made tremendous returns, but it's one I've just stayed away from.
Of course. And a subject that you hinted at, we'll spend a couple of minutes on, near and dear to your heart, and then we'll move on to some interesting comparisons of LLMs and some other bigger picture investment views, is AI safety. What do you make of the most recent conversations around broadly AI alignment and safety? And what do you think the public effectively gets wrong? If you don't mind, I understand people being concerned about job loss, about security, about the fact that, even Elon said we may be summoning the demon circle here, and that odds may be 10 or 20%, not 1%. On the other hand, the train has left the station. It is a battle between the US and China, and losing that battle, if they wickedly enhance their manufacturing capabilities and drive down cost relative to China, they get fusion energy. They develop, although arguably it's unrelated, quantum first. They get these edges in military and financial markets and bioweaponry. Like, there may be no catching up. Like, that might be it. So how do we balance the fact that we are, in my words, a Cold War? Things are very challenging globally. This is a race between really the only two that matter from this perspective at the moment. But there needs to be some understanding of issues around safety. How do I balance that?
Right. That's a great question and a very difficult one. I have views on it. We could go a whole podcast just on this, so I'll try to condense it. Probably the place to start. So I go and I speak at different conferences on AI. Last month, I was at a conference on artificial general intelligence. I gave a keynote, and the topic was safe superintelligence. And at the beginning of that talk, so it's a room full of AI researchers. These are the people who are working on the systems. All of them are coming up with research papers and publishing, and they're sort of the leading edge, right? That will come into the large language models and everything later, but they're doing the work. So they're the pioneers. They understand the field really well. It's their entire focus. And I just said, there's this notion of P-doom, which is the idea, probability of doom, the probability that AI will make humanity extinct, which sounds crazy, right? It sounds like science fiction. Like 10 years ago, people would think you're sort of a crackpot if you even mentioned P-doom. But it's actually a thing. And all the AI researchers, almost all of them know about it. So I said, what's the probability? Show of hands. How many people think the P-doom, the probability of extinction by advanced AI at some point, is 90% or greater? And I don't know, there's maybe 50 people in this particular talk, and we got 3 or 4 hands. So it's like, wow, that's kind of high. I said, okay, how about 50% or greater? We had half the room at 50%. And 20%, we had almost everybody. There was only one person out of that whole group who thought that it was less than 1%. But even if it was 1%, think about this. If the chance that AI makes humanity extinct is 1%, we're investors, we do expected value of things, right? If I make this bet, what's the payout, compared to the chance of it happening? So a 1% chance of extinction, if you do that bet over and over again, the expected value of that, if there's 8.2 billion people, 10% would be 820 million, 1% would be 82 million, right? 82 million lives lost. 82 million lives lost is the expected value of what we're doing at 1%. And almost half the room thought it was 50 times higher than that. But even at 82 million, you're 10 times greater than the COVID pandemic. You're all the lives lost in World War II. I mean, it's a huge, people don't even grasp that. And these AI researchers are saying that almost all of them think it's 20% or higher, and half of them think it's 50% or higher. So this is really serious stuff. And the word has begun to get out. It's not just the AI researchers now. You've had Jeff Hinton, who won the Nobel Prize and this father of AI. He's talked about this. But now you're getting folks like Paul Tudor Jones. This is in our world, Angela. This is, legendary investors. Paul Tudor Jones is, your listeners may want to Google this on YouTube. Multiple times now, he's been on CNBC saying, as a risk manager who knows very little about AI, but I talked to my buddies, Elon and these other people, and they all seem to think it's at least 20%. What are we doing? Like to any risk manager, that makes no sense to be playing with the doom of humanity with these kinds of odds. Okay, so we're going to work around to your question because you put your finger on the toughest part about it. Suppose you want it to slow down to make it safer, but what if China doesn't slow down, right? I mean, if you ask, they won't. And in fact, even Jeff Hinton, who will tell you that he thinks it's the very worrisome thing, did not sign a petition calling for everybody to pause precisely because of that. He said we could pause, but then China won't, just as you said. So I think it's pretty clear that there's these competitive dynamics. On the other hand, these competitive dynamics are pushing us ever faster on a runaway train with a way too high chance of catastrophic results. So what's the answer? So the good news, I have good news on this. I believe there is an answer. And I think the answer is not to sweep metal, but to design the systems safer. Currently, people have not been really designing them. They've been building them and then seeing if they're safe or not. And after the fact, they try to make them safe. But it's actually possible to design them to be safe. And one of the ways to do that, and if this behind me, my background, superintelligence.com, this site is entirely devoted to this topic because it's so important. We're not even trying to make money or anything off of this, just get the word out. And the way to increase the safety is to have a design where you have, just like within democracy, democratic AI, you have lots of different AI agents that serve as checks and balances on each other. a design that has many smaller agents that work together is inherently safer. It's more democratic. It reflects lots of people's values. You can have all these safety checks built in. So I think that's the future. The good news is I see AI researchers already moving that way because there's things like mixture of experts. There's AI agents that work together. People are beginning to realize you have a more intelligent system if you can have a lot of these things working together. So if they can work together in a democratic way, you can have this checks and balances. I think we can have a much safer system. So there are answers, and I don't think you need to slow down. You don't have to let China win. You can win and be safer. That's the good news.
I love it. And we're going to head into LLMs in a second and then transition a little bit into some even Stargate and final questions. But before we do that, now it actually finally makes sense. The sponsor of today's programs, well, of course, it's me, but really, it's my AI Family Office Masterclass, which I haven't even actually spoken to Craig too much about. And I will give you guys a little bit of context, although many of you have heard it already. I'm extremely, extremely active and on the cutting edge in the family office community as it relates to AI and everything around it. Well, now over 60% of my portfolio in public and privates. I go to Silicon Valley all the time. I know incredible people. And I still do my own research and thesis, and I make mistakes, don't get me wrong. I do believe there's no stopping this train, and the opportunity for my members to get specific insights and meet incredible other families is easily worth the cost of membership. But a little bit relative to AI, many of you know I hosted my first immersive 2-day in-person AI Family Office Masterclass in New York, which featured an incredible family principal who's a 3X entrepreneur as a significant faculty member and others and myself. And it was amazing. It truly was. And the things that we're going to talk about soon, which is understanding the LLMs, understanding deep reasoning, understanding which is best for what and how that changes, how to download multiple of them, how to even put them up together on the same screen. And honestly, worth arguably 6 to 7 figures is you don't get great responses if you don't know what questions to ask. Thinking a little bit of philosophy, a little bit of legal and law, and definitely finance. And there's an art to it as well as a level of science. It's known as prompting. There are actually people that are prompt engineers that are actually 6-figure earners from often their philosophical, their writing, as well as their technical capability. Because if you ask the right questions, you could get incredible answers to help you make a better 7, 8, and yes, 9-figure decision. So you're kidding me if this doesn't provide value to you from the architecture and decision-making in your family office. And no one. I am so far ahead of this curve, it's not even close. Am I too early? No. Now is the time. And this summer is the time that you need to get an edge. Because if you wait even 6 months to a year, think of the mindset and think of the culture. Think of the lack of rising generation engagement and think of fostering greater ego challenges, fear, and ignorance in the family office that could be addressed right now and get the most out of your people. I'm not saying to let them go. I'm saying to enhance their capability, to do 2, 3, 4x what they're doing now and more enjoyable work that they're doing. To do research, sometimes literally in minutes, you heard me correct, in minutes at worst hours, that would often take days and weeks. It's an incredible time, and the technology is here right now with what I just described, as well as certain fintech solutions, AI agents that we'll briefly get into with Craig. And these are things that I'm living through in my own family office, my own investing, and even governance and other structures that I do. So yes, I do talk about this a lot because I am obsessed by it. I may know a thing or two, at least by family office standards. So far more than just allocating. Go to angelorobles.com, look at the membership, and look into my AI Family Office Masterclass. You will absolutely not regret it. I get it. It's a premium. It's not cheap, and you get what you pay for often in life. I absolutely 100% know you will have greater information to make better and faster decisions on often 7, 8, and 9-figure plus decisions. I promise you that. I did a demonstration, and I have one coming up on August 11th and 12th in New York. So sign up this summer before it's too late. It's all online now. And Craig's going to know what I'm talking about. I'm not going to mention the vibe coding platform or even too much on vibe coding, But because it's multimodal, I could draw on a piece of paper kind of what I'm looking to do, and multimodally from my phone, place it into a certain program, and with some level of light prompting, effectively create a working app. Imagine tying that in via API to current solutions that I use. Imagine having to go and search by Crunchbase and PitchBook and find better private deals for me. Imagine all I could do with it and navigate it, and all these new things that are out there now, and some of them old like Zapier that do amazing things, tying things together and making your family office more effective and efficient. This is not the future. This is right now. And you could come out of this summer miles ahead of your competitors, your peers, and others, as getting a job in the family office world is wickedly competitive. Okay, I was a little longer than 90 seconds. I'm sorry about that, Craig. And this does relate to my next questions for you. And these are things that
before you do that, let me put in a pitch for what you're saying, because it's a lot of what you're saying. That's absolutely true. The questions, it's an art. So people think that they can just walk up and use ChatGPT and put in something and get a good, useful response. And yes, it's amazing what you can get out with no knowledge. But with a little bit of knowledge about how to ask the right questions, how to form that prompt, you can get so much more. And also, it's very important to have those skills, because these systems will hallucinate and make mistakes, and being able to think critically and understand how they work will save you. So I haven't taken the class, so full disclosure, but I can say I would be very surprised if you don't get 10, 100x, almost immediately back on that, because I've seen it just in my own group and getting marketing people and other people to use AI agents and then training. We've got such high return on that. I've almost never seen a technology that gives you this much return so quickly. So
kudos to Angela for doing that. It may get more narrow in the coming months to a year as more are using it. I could argue I could keep you ahead of the curve on that too, and really maximize a massive amount of value for the family office, and yourself. Now is the time. This summer is the perfect time when everyone is in the Hamptons and resting. The hell with that. Come on. I got my double-breasted suit and tie on. I'm ready to work. I'm sick as sick could be. But you know what? I grew up in high school. I did masonry contracting. So I can't be a wimp because I have a bad, I don't know, COVID, flu, or cold. But, I'm isolated in a rural area. So no one except for my dog is really going to be with me. So from LLMs, there's multiple different models. If I had to rank them, and this could literally change depending on what, and I would use deep reasoning for some of them. And we don't have time to get hyper deep in terms of what that is, where to use it. You could comment on it. I could say Gemini 2.5, but Anthropic Claude is so good. And for hyper deep 100-page PDFs and really hardcore deep reasoning, I think Anthropic is best. For marketing and other things, ChatGPT is good. They'll come out with their 5.0. We'll see how that is. Perplexity is unique. It's not really an LLM. It's more of a wrapper, but it gives incredible citations and is great for financial graphs and things like that. And by the way, I have some prompts that are a page and a half long. They're really thoughtful that you get by being a part of what I do, either as a member or a masterclass participant, and new ones that I come up with. What would be your ranking of the LLMs, and how do you integrate them, Craig?
So, this field is changing so quickly that literally, every couple of weeks, sort of the ranking on various benchmarks, which is kind of how the researchers look at it. There's a whole battery of benchmarks and different tests, reasoning tests. There's something called, I think, Humanity's Last Exam, which is supposed to be the toughest test, real out of the box kinds of creative questions. There's things like, can you pass the bar exam? Can you pass sort of the medical certification exam? And every couple of weeks, as each of the major companies releases their latest model, the rankings rejigger. They're all pretty good, the ones you mentioned. So Claude, Gemini 2.5 Pro. I probably use Gemini 2.5 Pro the most, mainly because I'm doing more technical research things, and I find it very good at that. Claude, I think, has an excellent reputation for writing. It does things sound really good, maybe better than some of the other models when you ask it to write and summarize. GPT is good. Llama, I think you're right, has lagged a little bit. It used to be right up there at the top, and now it's not quite, but it's still amazing. And the thing is, what's amazing, the very best one today, sort of, out of the lowest one out of the top 5 today, in 6 months, that one will have improved so that it's better than the best that you have. So I think the main thing is to start using them and use more than one, learn how to do prompts, just as you were talking about. That is a key skill. I think everyone will be extremely surprised with what kind of productivity increases you can get. I mean, just amazing. And when I talk to programmers, because coding is an area where these models are particularly good, it might kind of make sense. There's a right answer and the code works or it doesn't work. I've talked to them, I'd say the average is, one programmer can kind of do what used to take 3 programmers. I mean, can you imagine that? Triple? Each employee is
that's kind of what I said about even family office output without letting people go. I'd prefer you don't.
Yeah.
I prefer your people want to learn, and they are great. They are incredible, and it's not that hard. If I could learn, they could learn. They're probably smarter than me. This is a tremendous opportunity. Don't be afraid of it. Lean into it.
And I think in investing, as we both know, a small edge makes a huge difference. And so if you can have your existing team and then it's amplified with essentially sort of a bunch of, pretty smart assistants. They're not going to be as smart as the head of the family office or even maybe the portfolio manager or whoever, but they will be as good as an intern that you would normally come in. But this intern will be much faster than the human intern.
Yeah, you're being a little modest, Craig, and honestly, within 6 months, it will surpass the vast majority, except for probably the top 1% to 3% relative in the family office. That does not get rid of the need for emotional intelligence, for human-to-human interaction, for empathy, and for things that humans are incredibly valuable at, that I think could last for years and years to come. But to ignore this, to not be fluid in it, you are asking for a problem. I didn't want to make this conversation more about job loss and society issues. We'll save that for a different time with Craig and others. I wanted to be more optimistic. I wanted to show opportunities to make a lot more money and showcase that there's incredible opportunities in the LLMs that we're talking about now. And although it sounds like I was a little hard on China, and I think rightfully so, I do have to admit, and it's weakened a little bit the last couple of weeks, DeepSeek is no joke. DeepSeek is darn good. Now, do I trust it? How am I getting access to it? Am I using Olama? There's a whole bunch of factors there, but I got to tip my hat. I don't, well, my cowboy hat's about 10 feet away. It's good. And we didn't mention Grok. I think Grok is a little behind, but because it ties into X on certain geopolitical things and more what's going on in society and what's hot at the moment, it probably is the leader. Maybe those aren't as important, though, for most people. But even you admitted, and again, let's put politics aside, to discount Elon and assume that he's not motivated and sleeping only 2 hours a night on a warehouse floor because he wants to be number one, like you're kind of fooling yourself. He may not achieve that, by the way. I'm just saying he's definitely going to try.
Yeah, absolutely. He's trying. And in my mind, the entire Twitter acquisition, or at least the way I would have justified it if I were him, is all the data he's getting. I mean, he has access to real-time data. Now, you can argue about what the quality is, or, it may be biased in one way or another, but he's getting a lot of data from a lot of people on a real-time basis. And in the AI game, having a source of data that other people don't have is very valuable. And so I think that'll turn out to be a prescient move simply from a data perspective.
And Craig, as an investor and having children of varying ages, but adults, understanding the world of AI and finance, which makes you unique, how could younger, what we call rising generation family members that are more native to technology, that may even hear me and say, oh, this old guy, Angelo with the beard, he's actually pretty fluid on things like AI, about being future forward, not just on investments, but operational and architectural issues and challenges and the problems that AI and within its framework of LLMs and AI agents could solve. How would you recommend that a younger family member, perhaps even a younger advisor, speak up a little bit more, educate themselves if they didn't learn it in school, which they probably didn't, but they are going to be more native to it? And how could they illustrate the advantages of the things that we're talking about?
So, well, let me start by answering a question that's almost what you asked, but not exactly, which is, sometimes I hear a version of this phrased as, what should people be studying in school, or, is programming going to be obsolete, and so forth. And I do think that the skill for young people that's going to be the most important is critical thinking, because a lot of the work and the generation of work will be done by AI systems. And I think humans increasingly are going to be in the role of sort of editors and decision makers and deciders of, I believe this piece of research, I don't believe that. We need to ask this question, thinking of what the right question is to ask, being able to say, that doesn't sound quite right. Maybe the AI is hallucinating, or maybe I need to ask these other questions. Those skills, I think, are going to be very, very important. And the other one, which is not usually thought of as a skill, but I think is important for getting back a little bit on a tangent on survival, is values. The AIs don't have any values. You realize they're really smart Encyclopedia Britannicas, but they don't know what's right and what's wrong unless humans give them those values. And so the AI is right now, all those AI systems are implicitly learning the values of humans, because those values are kind of embedded in the data and everything that's on the internet, all our posts and tweets and emails. If we're treating people well, it's learning about that. And if we're, being mean to people, it's learning about that. So it's kind of learning it as it's learning everything else. But the ultimate source of values has to come from humans. It must come from humans if we're going to, have a good, prosperous outcome here. And so I think young people that are in school, the ability to be self-reflective and think, what do I care about and what's important? That's also going to be a prized skill, amazingly, in the future, because the AI is going to do a lot of the work. You're going to be sort of picking and choosing what makes sense critically, and also, is this the right thing to do? I think that's kind of the role for humans in the future. In terms of what they can do to sort of demonstrate AI to others, you had a great example with you literally can with today's systems, and you can sketch out. I would like an app for my phone that does these things, and you can sketch that. You can take a picture of it. You could feed it into Gemini with the proper prompt, press a button, and in 30 seconds, it'll give you a working web page that has everything that you sketched. That's maybe not a completely fully functional app, but certainly the user interface of it, which is amazing. I mean, that would take, I've done software development for 35 years and had teams of people writing code for me. That would take people a week maybe to get that same level, and you can get it in 30 seconds. So, I mean, that's just mind-blowing to a software developer.
It's an amazing time. And Craig, I think I would be remiss. I'm looking at my title, Investing in the AI Arms Race from Meta to Nvidia. It does say quantum to triple Q. We covered that and then some, but we didn't touch upon quantum. When you were last on, I did bring it up. In January, when Jensen was at the big conference in Vegas, what is that, CES, he did kind of put a little cold water. I thought it was a misdirect, because I know that they're doing things behind the scenes to be the leader, and the US government definitely wants them to be the leader. I don't know if you have a specific opinion. And again, maybe we are 10, 15, 20 years away, but suppose we're not. Do you have any specific thesis on quantum, or any stock plays in quantum, which could include IBM, Rigetti, and other companies that are active in that space? And I have been a pretty active allocator with my, what I call my liquid venture bets for small amounts in certain companies like that.
Yeah, so the companies that you mentioned I'm familiar with them in terms of being players in the quantum space. I'm not an expert in quantum computing myself. I do try to keep abreast of it. Jensen Huang has kind of walked back those comments since he made them at CES. And more recently, he has said, wow, there have been some breakthroughs. And so maybe it's not so far off as I first said. And I think the biggest breakthrough that I'm aware of recently, so a big thing with quantum, without getting too technical on it, which will quickly get above my knowledge level, is error correction. It's how big of a computer can you build with qubits? And in order to build bigger computers, you have to get to a certain size before they can do anything that's really meaningful or useful. The problem is it's really easy to have errors. And so if you can have efficient ways of correcting the errors, that's how you can build bigger and bigger systems. And there was recently a breakthrough where they could basically do error correcting, I think it was 90 times better than previously. So that was a big improvement. And what that tells me is that just as with many technologies that are new and evolving, it'll kind of go in fits and starts. If somebody has a breakthrough like they just had, that can sort of accelerate the field and everybody say, oh, wow, maybe it's a couple of years closer than we thought because we didn't expect such a big breakthrough so quickly. But it's not sort of there yet. And if I had to invest, probably Angelo, I would look at your recommendations above mine on this one, but I would probably, have an allocation to IBM, mainly because I'm familiar with it, and they're also doing other things in AI, and they are one of the leaders. I wouldn't say they're necessarily the leader, but they're one of the leaders in quantum computing, and has been working on it for a long time. And I also, many years ago, my first job out of grad school was working for IBM, so I knew some of the guys at the research labs and so forth. And I know they have smart folks that have been working on this for decades, literally.
For sure. And we didn't really have time. And I know you're more focused on liquid companies that have basically, like I said, given venture-like returns and you're totally liquid and you have more generally transparent information. There are certain privates I've been more active in robotics and space tech and AI. We'll save that discussion, maybe upcoming with JJ Sowers or another guest for a different time. Craig, it's been great to have you on. I am going to have a closing commentary, but as I'm sometimes a gentleman, sometimes I'm going to give you a chance to explain a little bit of the work you're doing in superintelligence.com and even in IQ companies and any interest you have that may be consulting, advising on the board. And although I know you're very modest about it, your returns internally for what you do, and you're not a hedge fund manager anymore, you have no interest in managing money, have been incredible. But right before you get to that, I'm going to repeat what you said earlier. This was primarily, not exclusively, but primarily an investment-centric discussion. It's at this point in time in early July, very early July in 2025. Our opinions, each of us, may change as new information comes in a day from now, a week from now, let alone months or years from now. Also, everyone's situation, their goals, their liquidity needs, their risk tolerances is totally different. And admittingly, especially being overly allocated in AI and tech does mean it likely is going to be way more volatile. Maybe for you, the answer is zero. Maybe it's greater than that. I don't know. You're going to have to make your own decision. This is for entertainment and educational purposes. When you invest, you can lose money. You can even lose all your money. You need to think for yourself and make your own decisions, because one more time, when you invest, you can lose money. Craig, yeah, I'll give it to you.
Yes, and thank you for that disclaimer. Past performance is no guarantee of future performance, as we used to say in the hedge fund business, and it's definitely true. So a couple things I guess I'd like to close with. One, just because I think it's the most useful thing probably for the audience, is it's very helpful to think about AI investing in terms of first principles. And again, it's the data, it's the chips, it's the algorithms, and the talent. If you keep those three things in mind, and any potential investment, you sort of try to check those three boxes and say, how good are they on the data? How good are they on either they make the chips or make their own, or they have access to chips? And then how good are they with the talent? That's kind of the lenses that I use. In terms of superintelligence.com, we will have an interesting paper. So here's a reason to check out that site. A week from today, we'll release a white paper where we evaluate 4 of the top large language models and ask them to rank the AI companies. And there'll be a white paper on that saying, and then comparing that to my own ranking and some comments about that. That might be useful to an investing audience. So that go to superintelligence.com. We'll make that available to Angelo as well, so he can post it on his site. But the main thing I want to leave you with is this is a tremendous opportunity that is coming. both for investors, but for humanity as a whole, in terms of, prosperity and peace and abundance. I mean, there's never been a technology like this. And at the same time, it comes with risks. And the most important thing from a AI company perspective and researcher perspective is to design the systems to be safe. But from a human perspective, from something that affects all of us, it's as we use these technologies to make sure that whatever values are reflected in how we use them are very positive, because the AI is learning that. And even though we're not aware of that, it's almost like with small children, they pick up on what you do. Even if you tell them this is the right thing, they're going to watch what you do. And that's the same with AI. So AI is watching all of us. We're role modeling examples for the future. I think that's very, very important to try to be good role models and to model positive human values, and also to learn about some of the safety concerns and what we can do to mitigate those risks. And that's kind of what superintelligence.com is all about. We have videos, we have papers, it's all free, and it's all about just getting educated. And some of that might help with investing, but I think a lot of it will just help all of us. And so thank you to Angelo for giving me this opportunity to be with you again. I really enjoy these, and I'm looking forward to our next one.
The pleasure is always mine, Craig. I learned so much, and I hope my audience did as well. I do have some closing commentary, obviously on a subject that I'm obsessed by and actively both putting my money where my mouth is and utilizing in every way. First, on what Craig just said, oh God, I better be careful, because often I'm really not happy with a lot of outputs I get from LLMs. And what do? Am I nice? Am I a gentleman? Of course not. I swear at it. I write swear words and colorful metaphors in it. And I don't know. I heard Sergey Brin say this on the All In. It seems to make it work better. My son, and I'm not even trying to be a little funny, he actually said, Dad, I don't know if that's really a good thing. It's going to remember you, and it may not remember you in such a good way. So it's like I'm actually getting a little fearful about that. Someone said, yes, I promise there was no cigars for me yesterday, none today. My sore throat, my nose, I'm going to take off this double-breasted suit, relax, have a little soup, and go to sleep early. So thank you for looking out for my health, by the way. I, of course, still put in a workout. You have to. No days off. You got to be disciplined. I am extremely, you could argue all my chips are on the table when practically no one has any chips on the table in my community relative to AI. I just don't understand it, other than what I said earlier with the level of ego, ignorance, and fear. Don't let that be you. I could argue maybe 2 years ago it was me, and I made mistakes throughout my whole life. I'm an imperfect person. Yes, I was correct about Bitcoin. Yes, I have been correct about my launching family office association when everyone said I would never amount to anything in that, not knowing anyone. And I'm lucky with incredible people around me, an early founding president in Joe Riley, Ryan Anson, and others, that it did grow to be something. So kudos and respect to them, those around me, and those that were supportive. I've never felt the way that I felt or feel about AI. And yes, I think it's a time to be incredibly rich from investing. And many of you are missing out on that my members are getting unique access to. But I think about, sure, I love family office structuring. Unless you're a top level attorney in the space, I could go back with anyone back and forth on that. I love tax strategies. I love things that relate to family dynamics and governance and father and son relationships and the history of the family office community going back literally hundreds of years. And Frederick Gates is the first real, for the Rockefeller family in the 1880s, first real family office executive. I do like some aspects of traditional investing and all the areas that pertain around to solving problems. At the end of the day, I don't think my members use me enough. I want to help them solve their problems. Notice I said help them solve their problems. Learning that a little bit from the great work of Peter Drucker is better than solving the problems per se for them, although sometimes I may nudge them in a right direction. But everything that I said falls within line. AI is going to be the control layer for, wait on it, everything. That's just the way it's going to be. And I may not even like that too much, but it is what it is. I'd rather be optimistic than ignorant. I rather make an impact, including helping younger people and in some level of charitable and philanthropic endeavors. I come from a very humble background. Any successes I've had, and there's been failures, any successes I've had have often been built around the incredible community around me and me listening to incredible people and making some strategic, tactical, and concentrated bets. Like I said, when I started on this, I am all in on AI. It could absolutely, there's not even a question about it. Craig said it. It can make you make better and much quicker 7, 8, and 9-figure decisions. I could teach you the tools to do that. One, as a member, you'll get some access to that. So simply join, go to angelorobles.com and be a part of the masterclass that I'm hosting. It's on my website. It's AI Family Office Masterclass, the tab on angelorobles.com. And I know some of you have said, Angelo, you're getting me closer, but ooh, it's a pretty good penny. Just do it. I will give you massive advantages. You'll meet other incredible families. You'll meet incredible faculty, including 1 or 2 people that are billionaire creators and users of it. There's so much incredible things going on. Now is the time to get your mindset and culture and yourself and your family office right. I get it. I push this kind of hard. I push it hard because I want you to see what I see. I want you to see at least part of what I see and move forward in this so I could give you a massive advantage. It is going to be a very intriguing next 6 months, 3 years, and 5 years. You have a chance to have a say in this by the actions you take right now, not waiting 6 months or a year. I'm not saying it's too late then. I'm just saying you're a little bit more behind the 8 ball. Why not get an edge now? So go to angelorobles.com and learn more. I am at the forefront of this in the family office world. I'm going through it, making my share of mistakes, although a lot of them, of course, are behind me now because I've learned so much by being the one who's been immersed in it for a year. So on that note, I appreciate Craig coming on. I always learn so much from him. All of you appreciated. I may do 1 or 2 lives tomorrow right before July 4th. July 4th, of course, is an amazing holiday here in the U.S. It's Independence Day. I love it. I love the U.S. I wish everyone the best. Thank you all so much. I appreciate your time. Thank you to my audience. I appreciate all of you. To my members, a special thank you. And of course, Craig, I appreciate you coming on. Thank you so much.
Thank you, Angelo. Have a great 4th of July.
You too. Thank you, everyone.